I predict a small little bump followed by an eventual break of disorderly rate of a decline, which is going to lead to a disorderly increase in silver till we get to the neckline, that red line I've drawn there. So this area will be covered at real high speed. This is going to be probably during gold running for the 2905, and silver, as we indicated, if you're at 65 and gold's around 3,000, you're going to be in and around the $45 mark.
Francis Hunt, a seasoned expert in the field of finance and precious metals, brings valuable insights to the market through his in-depth analysis. The gold rush typically occurs during the summer months, from the latter portion of July through the end of August. According to Francis Hunt's analysis, there may be a slight initial increase in the ratio of gold and silver, followed by a disorderly decline. This could potentially result in silver prices rising as gold reaches near $3,000 and silver hits $65. Gold-to-silver ratio overshot to 126.43 during the COVID-19 scare in March 2020. This is an all-time high and arguably unsustainable when measured by many different matrices. The current ratio of 78 to 79 is still considered to be elevated by historical average. As August has inverse correlation to the price of the underlying metals, gold and silver, lower ratios suggests that we should expect the price of gold and silver to continue higher in the second half of 2023. The latest Kitco News weekly gold survey shows that retail investors expect gold prices to push back to within striking distance of $2,000 an ounce, even as the Federal Reserve is all but guaranteed to raise interest rates another 25 basis points next week. Meanwhile, market analysts, while bullish, also appear to be more cautious. Francis notes that the dollar's weakness against other currencies is a crucial bullish scenario for precious metals. The gold price has reached a renewed 2-month high, maintaining its strength despite a slight retreat from the daily peak. This rise can be attributed to the broad retreat of the US dollar and the sluggish market conditions. We will now bring you clips of Francis Hunt from his recent interview with Palisades Gold Radio. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
On this silver gold ratio, a couple of times that we've been with you, we've highlighted, for example, that the way this goes down, and I'll do a fat cokey draw, this is a bit of a big slap in the face. So this was quite a high counter rally. This was during a post the gold bull run and that worst bear market on the gold when we got heavy. We've had 18 months since the high in 21. That was a long sustained period. We said the only way we can see this red line, the thick red line at the bottom breaking, is something along the lines of this. We look for 3 bounces and ever more hard smashes to the downside. You've just had a revisit to our basing grind line, which is this red line here. I'll just draw maybe with a different color in orange just below it so that you can see it, maybe not so fat a coin. That one right there. You've just had another really hard smash down. We want this line to be broken with momentum, and the volatility is getting higher and the ability to swing away is getting lower at the moment. So we're squeezing harder and harder against this. We've gone through gold, and this is one big structure that we really, really like as well. And this is this entire pullback period since the highs. So the pullback period, we went as high as 29. We had the Wall Street silver bets where actually intraday you might have got a 30 over there. But this has all been generally quite heavy silver period. This 26 level is a really important level. We see a left shoulder, the bigger dip head here, and the right shoulder. And that continuation pattern takes you to 38, and of course the full bear flag, bull flag, my apologies, takes you to 45. So those are big targets coming out of that, 38 and 45 coming out of this COVID lows, March 22 spike, projected from the lows up to there to give you 45, and that big inverted head and shoulder. So we need silver to come up to 26 and break with real momentum. And you've got the dollar to go down from around 100 on the Dixie all the way to 97. So it's trading Euro USD 12. You're probably needing 15, 16 to come. And that's going to lead to real deval in dollar. Gold will still be making headway against the other currencies, but particularly against the dollar. There's a dollar weakness theme in all of this, but gold is now starting to even get bid against the other fiats. So there will also be a pivot to a standout gold and silver bull as well, which could start the exciting period. I felt this was going to be August, maybe into the beginning of September. It could be coming forward a little bit. You can sometimes say hurry up and then end up waiting. We might come up and pause a lot before triggering here on silver. There could be a lot that happens. It's still some way from 26. It's about 95 cents away. So it could take its time, churn a little bit, and we need a little bit of gold strength standalone. That's my scenario.
During the interview, Francis expressed the positive momentum for gold and its potential to gain strength against multiple currencies, signaling a potential bullish trend in the precious metal market. Precious metal prices, especially silver, began a brief rally on July 12 before retreating again. Many remain optimistic that gold prices will continue upward until the end of 2023. However, gold and other precious metals markets still face some bearish pressure. As the US dollar dropped, precious metals became more affordable for investors. However, many are still expecting another interest rate hike from the hawkish Fed, which is dampening the optimism of the bulls. Francis points out that gold's recent reversal against other currencies, such as the euro and the pound, is a significant indicator of its strength. Silver managed to rise more than any of the other precious metal prices throughout early and mid-July. Similar to gold, silver displays bullish momentum in the short term. Overall, the gold price continues to exhibit strength, supported by the retreat of the US dollar and various market factors. Let's get back to interview.
If we pivot to the gold, it was actually quite benign and not doing particularly well. It did its initial break, and then it did a pullback. So if we go to the gold charts and just have a little look at that. In fact, I'll start with the gold futures chart that we did some time ago. I'll take all the lines off and just bring you a little bit more history. We said you have begun the great break that we've been anticipating, but it was a stop-start affair. You can see we broke that red line. We triggered there a little bit higher. We bought at the legacy high 2075. 2075 we haven't held above on a weekly time frame once. That's that blue line over there. And we pulled back and we revisited our breakout to this big, thick red line. And now we are reasserting. And we said, after the third visit, you'll have your smallest pullback. This was quite a large pullback the second time. This is the smallest pullback we expect from the rejection at this level. And the fourth time is the time that we break this 27.5 as a charm. So I think you're going to get some good momentum, and that's the beginning of that journey to 2,905, my apologies, in dollars. But during this period, the dollar was skidding off. You can see it in quite a bit of a falling wedge is what we describe. So if I just take that off, you could see it was a controlled, it wasn't losing too hard, but a bit of a falling wedge. So it was slipping into a level where it needed to find some support, and that has then come in. And again, if we drop that technically into the lower time frames, when I was speaking to you and say, hey, get us back in, we've got a call for you on gold. We were looking at this chart over here. Let's wipe our face again there. This was what we call a bottoming structure there, left shoulder, W head, and then a right shoulder. And we said the breakout of the 1930 is going to lead to a run that will see that target being taken out. And again, we had a little bit of a pause, pullback, and now we've smashed higher. So this is a reversal on the shorter time frames. This is 4 hour against gold. Before I leave, during that period, it was quite interesting because gold was behaving like just a kind of a currency. It wasn't a dominant currency. It was in the middle of the pack. If I just jump from the dollar, take a mental screenshot of that, which I'm showing you gold against the dollar, and then just see gold euro. You can see I've left the sketches that I drew for gold dollar on there, and you can see the difference. Actually, gold euro was slipping during this period. was slipping during this period into new lows. You made a new low here. So this is a key reversal now, not just against the dollar, but now against the other currencies again. And this was why I was saying, first it gains against the dollar, which is weak, and then it turns against the other currencies. So now it's strong against all currencies. And it's not just the euro. I can do the exact same for you on the pound as well. Again, you were skidding into lows, roughly in the same place here. It's only in the last, since the 17th, you can see the day here, since the 17th, that you've started a higher momentum move. You were throwing in pretty poor technicals. We call this grind lines, and this is a sort of a rising wedge. You were always going to sell off a little more against the pound. So actually, this has been a dollar weakness story until the 17th. Now it's about gold getting up, and some of that money that's moved into euro, pound, and Swiss franc. Another big beneficiary is the Swiss franc, smaller currency, but deemed higher quality, is now the beginning of the move of gold again against everything.
The World Bank's long-term gold price forecast as of April 2023 expected gold prices to finish 2023 at $1,900, falling to $1,750 by the end of 2024. Meanwhile, the gold rush in the summer months creates an opportunity for investors in the precious metals market. With the market exhibiting a cautious bullish sentiment, investors should closely monitor price action around the support and resistance levels for further insights into the market's future direction. Could the gold rush and potential decline in the gold/silver ratio lead to a sustained uptrend in precious metal prices throughout the second half of 2023? Share your thoughts in comments section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.